Here's the brutal truth nobody tells you. The best time to start earning passive income was 15 years ago. The second best time is right now. Most of you are waiting for the right moment, when you have more money, more time, more confidence. But while you're waiting, compound growth is waiting too. And every month you delay costs you tens of thousands of rupees in future wealth. Today, I'm showing you exactly how to start, why starting small beats starting late, and the 3 realistic income streams that actually work for beginners. Let's talk about what passive income actually is, because there's a lot of confusion out there. Passive income is money that enters your account with minimal ongoing effort after an initial setup. It's not zero effort. That's a myth. But it's leverage. You work once and get paid repeatedly. A YouTube video takes hours to create, but once it's live, it generates views and ad revenue for months or years. A stock dividend takes seconds to own, but represents thousands of hours of company work generating profit. The magic isn't the passivity, it's the compound growth. And compound growth only works if you start early enough to let time do the heavy lifting. Here's the number that should terrify you. A 25-year-old who invests Rs 5,000 per month in the stock market at a 12% annual return will have Rs 3.2 crore by age 60. A 35-year-old investing Rs 50,000 per month, 10 times more, at the same return will have Rs 1.8 crore. The younger investor, with 1/10 the monthly contribution, ends up with 78% more wealth. That's not motivation. That's a mathematical fact. This is why investing tips always emphasize starting early. It's not inspirational fluff. Time is literally your biggest asset when you're young. You cannot buy it back later, no matter how much money you have. So how do you actually build passive income as a beginner? There are 3 realistic income streams that don't require you to be a financial expert or have substantial capital up front. First, dividend-yielding stocks and mutual funds. You buy shares in companies or index funds. They pay you quarterly dividends, and the share price itself usually grows over time. A Rs 1 lakh investment in a 4% dividend yield fund generates Rs 4,000 per year. That's passive money hitting your account. You can start this with just Rs 500 through most apps. Second, rental income, but not the way you think. You don't need to own property. Fractional real estate platforms let you own pieces of commercial buildings starting at Rs 10,000. It's real estate passive income without the tenant headaches. Third, creating digital products, a course, template, or ebook. Yes, this requires upfront work, but once it's done, it sells while you sleep. Successful course creators make Rs 10,000 to Rs under 100,000 per month from a single product. But here's where most people fail. They understand passive income intellectually, but they don't actually start because of what I call the psychology of wealth. Rich people aren't smarter than you. They're just comfortable with small, boring decisions repeated over decades. They open a SIP and forget about it. They reinvest dividends automatically. They don't obsess over daily market movements. Poor people are obsessed with quick wins, quick trades, quick fixes. That psychology is why most people who read about investing tips never actually invest. They're waiting for certainty that never comes. The wealthy understand that starting with Rs 500 per month and staying consistent for 20 years beats never starting at all. Money habits matter more than intelligence. Your first action step is absurdly simple, which is why most people won't do it. Open an investment app, Zerodha, Grobu, or any official platform. Complete KYC in 5 minutes. Set up a Rs1000 to Rs5000 monthly SIPE into a low-cost index fund. That's it. You've now started earning passive income and leveraging compound growth. Don't overthink the perfect investment. The best investment is the one you actually make, not the one you research for 6 months. This month, invest Rs1000 out. Next month, Rs1000 again. In 1 year, you'll have Rs12,000 as growing silently in the background while you sleep, while you work, while you live your life. This is where I have to be direct with you. I'm showing you how passive income works and personal finance principles that successful people use. But I'm not a financial advisor, and this isn't financial advice. You should consult a qualified financial advisor before making investment decisions. Understand your risk tolerance, and only invest money you can afford to lose in the short term. Markets fluctuate. Past performance doesn't guarantee future results. But what does guarantee poor results? Never starting. Never learning about the stock market for beginners. Never building money habits. That choice is entirely yours. So here's what I want you to do right now. Hit that like button if passive income actually interests you. Subscribe, because I'm dropping beginner trading strategies and investing tips every single week. And comment below. What's stopping you from starting your first SIP this month? Is it fear? Lack of knowledge? Waiting for more money? Tell me in the comments, because I read every single one, and your answer might be the topic of next week's video. The difference between people who build wealth and people who don't isn't intelligence or luck. It's starting early and staying consistent. You already know that now. What you do with that knowledge is entirely up to you.